Hi, I'm Alhan, the financial advisor. So today I'm going to be talking about dividend stocks and why dividend stocks is for the lazy investor. So dividend stocks is basically you buy a share of a company. Even if the stock doesn't pay a dividend, you're still buying a share of a company and they will pay you a dividend. And why? And you shouldn't be spending these dividends. Instead, what you should be doing is you should be reinvesting these dividends. So this way, your income, like dividends, they pay you every quarterly. So every 3 months, a company is going to give you a dividend. So this way, every 3 months when you get a dividend, you reinvest that. It's gonna compound, and it's gonna basically give you regular income, or is 1 year, 2 years, 3 years, 10 years, 20 years. It's gonna give you a regular income. So it's gonna be very good for you, and then you can rely on that income to supplement your earnings by reinvesting those dividends. So it's very important that you don't spend these dividends, and instead what you do is you invest these dividends. So, for example, and obviously you don't just have to invest in a company that pays dividends. You can also invest in companies that don't pay dividends. Like, for example, Tesla that I have on board, that I'm going to give you an example and show you. Like, for example, there are companies that pay dividends, like Apple, Pepsi, Coca-Cola, Waste. There's a company called Waste Management. They pay dividends. Procter and Gamble, that also pays dividends. And there are also companies that don't pay dividends. Like Tesla does not pay dividends. Amazon does not pay dividends. Uber does not pay dividends, but both have great benefits. Like, so for example, Apple share right here. Currently, the Apple share right now, it's priced at $243, and it gives you a dividend yield of 0.41%. And if you buy one whole share, and you don't have to buy one whole share, you can invest as little as $1. All you have to do is go on your phone right now, open up the broker's app, go on your app store or Google, Play if you have Android, and just go and install like Robinhood or install ChargeSwap or Fidelity, and you can buy as little as $1. But let's just assume you buy $243. That's the current share price. So you own one share of a company, and that's what I said in the beginning. Dividend stock is basically buying a share of a stock, and that will pay you a dividend. And don't spend those dividends. Reinvest those. So you buy it for $243. Dividend yield 0.41%. So then one share is going to generate you $0.9963. Assuming you buy 10 shares, that's going to give you $10. Let's say every week you buy one share, and they pay you dividends every quarter. Every quarter is 3 months. So if you buy, let's say you buy four shares a month, that's 12 shares. Let's just say you buy 10 shares in one quarter, that's $10. That means, let's say you buy 40 shares in 1 year, that's going to be like $40. So you're compounding, you're investing, and this is what I'm going to talk about the graphs as well. And this is why reinvesting is very important, because it compounds your money. Obviously, there's risks associated to it as well, like market mortality, price crash, so that can affect. That's why you need to diversify. So don't just put all your money in Apple. I mean, you could. It's up to you. You can do whatever you want. I'm just advising you. Don't just put all your money in Apple. Put your money in different like competitors like Dell Technology. Put your money in like Nvidia and different stocks. For example, you don't just also yes, dividend stocks is good if you want like passive income, but again, remember, you can't really use them if you really want it to compound. That's why also you should look at other stocks that don't pay dividends. For example, Tesla. Tesla does not pay dividends, but did you know it increased by 1,368%, much higher than Apple? 5 years ago, in 2020, the stock price for Tesla was $28. Currently, the stock price of Tesla right now is $411. If you just invested $100 in Tesla 5 years ago, you would have $1,467. So from $100 5 years ago, you went to $1,467. Yes, the $1,500 might not be a lot. It might just be your monthly rent. But again, the more risk you take, the more money you'll make. Obviously, the more risk you take, the more money you might also lose. But again, if you're willing to take the risk, let's say you invested $1,000 5 years ago instead of $100, you would have today $14,673. So almost $15,000, right? So again, you don't just have to rely on dividend stocks. I think you should do both. So this way, if you should have a set of dividend stocks, and you should have a set of stocks that don't pay dividend, because a lot of these stocks that don't pay dividends usually go up higher because like they're reinvesting their capital in the company, and the market price of the share always goes up. and then this way your money is always going up. A stock that pays dividends is also very good because every quarterly you can collect a paycheck. Even if the paycheck is as little as $10, again, it's gonna compound. Right now, the first quarter you invest in Apple, you're getting $10. Let's say you buy 10 shares, you get $10. By the end of the year, you can make $40 if you own 40 shares. Obviously, again, invest in Tesla as well. You can invest in Tesla. For example, I have these graphs here. Not so good at drawing as you can see, but this is an example. This is a linear graph. So this is like you doing your job. Assuming you're in 20K, 25K. Even if, let's say you get a 10% or 20% raise every year, which is very good. Like, it's like getting a 20% raise is like extremely good, because nowadays no one gets a 10-20% raise. Most people don't even get a raise. So this is very good. Compared to, let's say, if you invest in stock, it's like a quantitative graph. Like, it's going up quantitatively. So it's always going to go up. Unlike your job, in the end, it's going to like plateau. Like, you're going to get to a certain level in your job where like your income is really not going to go any further, because like you start off entry level, you become, you know, a manager, you become a senior position. Like, your money is really not going to go up. Unlike the stock market, like, it's going to go up. Like, it's going to go up. So this is why use your job, the paychecks you get from your job, use that to invest in the stock market. And again, you don't just have to, yes, I did title this as dividend stocks, but don't just rely on dividend stocks. Apple is good, but like also Tesla is good. So let's be honest, if you invested $100 5 years ago and you made $1,500, I don't think anyone in my mind would regret not investing $100 5 years ago, right? I don't think if anyone invested $1,000 5 years ago and now has $15,000, that's a $14,000 gain. Percentage-wise, that's 1,268% gain. No one would regret that, right? And obviously no one would regret